The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, noon until 1 p.m. Eastern Time, Monday through Friday. Look at the E-mini, down 30. It hit 2766.25. Now it's at 2774.25. Little oversold rally here. And let me just draw this in here. We've got an arch, let's see, a cup formation that's coming back. Let's see if it can touch the right there 2779 level in the next couple of minutes. It's at 2774. If it can go above that, it could hit the 2784, which is a 200 period exponential moving average resistance line. Wow, any break underneath 2763 would be very negative. All right, let's get on with our show. Crude oil is down $1.75 at 57.39. This is not a good sign because the crude oil ran from 42.60, well, it was at 76.90 in October, plunges over 32 points. I mean, that is, cut in half almost at 42.60. I think that's a smooth, so let me see, 42, oh, it's 43.59. Sorry, the numbers we're looking at now have changed because this is a continuous contract. So the low that was made December the 28th, and the week of the 28th is the low 43.59. Then it rallies up to the high of 66.79 just 6 weeks ago. Now it's back down to the 57 level. This is not good. If you're looking at that monthly chart, look at that. Huge move up, huge move down, and now a very sharp move to the downside. This is going to be very important because if crude, I had said over the last couple of days that 57 to the 55 area is really important to hold. Crude oil goes below that. That's a real problem. Right now, it's telling us that in terms of the stock market, they had gone up together since December. They had come down together from October into December. They ran up into the late April, early May highs in the different indices. And now they've come down together. So we got to watch this real closely because there is a symbiosis, the action that we've got to monitor closely. Now let's just go back to the market. The Dow itself come back a little bit. It's now down 340, 338. The gap down in the arch formation. Let me just do this real quickly. I'll be talking about this a lot tonight. I'm doing a webinar. And sorry, I shouldn't say webinar. I'm doing a live. I'm the guest speaker. If I can just find this, I'm doing two things at once. I'm the guest speaker, a special speakers meeting. Basil Chapman, that's me. Wednesday, May the 29th, that's today, 7 o'clock this evening till 9 o'clock at MIT E51, room E51 to 376. I think the room is 376 on the third floor. 70 Memorial Drive, Cambridge. This is at the MIT Massachusetts Institute of Technology. You can go along 70 Memorial Drive and then take a left and go towards Amherst Street or Avenue, I think it's street. And then on that corner is the building. And you can park and come up to the third floor. Love to hear you or to hear your questions. So the core patterns of the Chapman wave methodology, we look for the lowest identifiable, lowest low, merely count each successively higher peak, alphabetize them on the way up. You can go to 8 to 7 higher peaks, but the fourth highest peak at D is where other things can happen. I'll show you that in a moment. D is where you could get the deepest correction, or you could recycle to the upside. And the patterns we're looking at, we're only two patterns: straight up, straight down, and an arch and a cup formation. That arch formation can be a combination where it comes straight down like this, and then makes an arch like a lowercase h. If it takes out that left side low, that's very serious. If it closes under that, that's really serious. If it goes under and then closes above it, that has other implications. Inverted, it looks like an inverted Y or upside down H. If it takes out the left side high and holds there, it means one thing. If it gets repelled right at that line, it's like a double top. So with that in mind, those three patterns, straight up, straight down, arch and cup, let's look at what we're actually got in place here. And what we have is, there's your big cup in the Dow. It goes from around about the 25th of March, goes up in this archy formation to a peak D. There's that D. And it goes to 26,695 on the 23rd. We got short the Dow, still short a good position from just the day before the all-time the recovery high, and we have taken some profits off. And what has it done? It's gone right through that left side H. There it is, the 25,222 low of the 14th. And now what we're looking at is the gap down was only 11 points above that. So we're really deep down, unless it's a spectacular reversal today and the market closes up above 25,235, let's say. It can happen, it happens, but wow, I don't know how that's going to happen under these conditions. That weekly chart is really telling me that there's more room to the downside. I'm going to be talking about this tonight. I'm talking about chart patterns. I'm going to be talking about the different indices, different stocks. You can ask me about stocks. It's going to be a lot of fun, because there are fundamental questions that people tend to ask in these meetings, and I have to try to deal with it both. Try to do it in a fundamental way, but I do it with an MRI, an X-ray of the patient, which is the market, and I do it on a purely technical basis. So this is so far very negative action. The MACD in the weekly chart has crossed decisively negative, but you've got another 2.5 days to go, so anything can happen. And the stochastic's way down at 45%. I love it over 80%. I especially love it over 90%. So this is really poor action. So, and that says to me that the monthly chart now testing for the first time, the 14-period exponential moving average, since it broke out so sharply earlier last year. Whoops, let me just do that again. Back in January, it went under it last year in December, came above it in January. This is the first time it's retesting that 14-period exponential moving average, the black line. So let's do this on the others. I'll do it real quickly. Basically, we haven't yet found some kind of a real base of support. However, the 200-period exponential moving average, the orange line in the daily chart of the S&P in leg D to the downside, there's your arch formation. There's the dreaded H. It's way underneath it. That low was at 28.01, I believe. Yep, 28.01 on the 15th, on the 13th of May. We're trading right now at 27.73. Not good. On a very short-term basis. So did I do this? Yes, I did. So we got this pattern here that says some kind of an attempt to the upside is unfolding in the 2-minute chart. All right, let's get back to our nitty-gritties. So this is negative, and it's suggesting that the weekly chart now in leg C. Now, what I discussed in terms of the Chapman wave methodology, I said to subscribers to my opening call that everything about this says that the peak C that we're looking at both in the daily, in the Dow and the S&P charts, is looking much more like a peak D, because the MACD has crossed negative and the stochastic's gone away from the 95, 97% area, really strong, to now down at 61%. That has all the characteristics of what I should have put down as a down arrow. I can't. It's at a peak C. So this is a correction. And this is quite serious, because at 27.73, it had better hold the 27.68, 27.65 level. Otherwise, that's a real problem. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the E-mini is suggesting that by 12:26, the 2784 level should be tested. It's at 2775. Wow. It's a long way to go. Oh, well, we'll see what happens. In the meantime, back at the ranch, let's go back to this. So we're really looking at this look at this arch formation, almost an inverted V-shaped pattern, and it's taken out that left side lower right there. This is going to be very interesting because the stochastic at 16%, if it flattens out, that's negative, but around about the 16% area and then going to the single digits, this is where you start to expect some kind of a pretty sharp rally to unfold. Not sure if it's going to happen yet, but this is what we're looking at. Now, the other thing that I'm also looking at is this. I'm going to do this right now. I'm going to go to the Chapman Wave automated projections. So this is 10-minute, and this is the left corner here. This is behind it is the daily chart, weekly chart right in the middle, 120-minute chart, little right corner here, and the whole thing, and the big one is the monthly. So this is the Dow, and it said there was tremendous resistance in the 26,680s, and it went to 26,690. It broke the 25,467 support. It went completely down, and now I don't see any support until 24,631. 24,631 in the weekly chart. That's just a projection. That's saying that that's a level to watch for key support. So on the very short term, I don't see anything in the 10 or the 15 or the 120-minute chart. So it says that you're kind of on your own here because we haven't formed a base of support. But that also says that the resistance level is now at 25,200, which was support in the 120-minute chart. So that's going to be strong resistance. And in the S&P, it's a little different. S&P has right here 2735 as key support. We're at 2775, so that's another 40 points down. But look what happened. All of a sudden, the daily is 2764 as key support. Now I need to open this up a little bit so that I can do it all in one swoop right here. So the low today is 20, where am I? Oh, it's not doing that. Okay, I want to link that. Let me just link that. Green. Green. Okay. So the low today is 2766. And this says 2764.71. That's really good to keep in mind because it's the first real support level that's been printed for at least a week and a half. And that's now very valid. We've broken the 2791 support in the 120-minute chart. That's the only one that's left. Now let's go to the QQQ. 123 QQQ is trading right now at 175.89, down $1.79. And you can see 175.42 is the support, the automated support level. In the daily chart, we've already hit 175.09. We've gone below it. And then 171, and I don't know what this is right here, 170.66. So there are a lot of support levels coming up, but they are lower down. And 169 is the weekly. The resistance levels, I don't see to me 179.64 is the resistance level in the 120-minute chart. So let's go to the IWM. IWM overall has been very weak, and today it is down 174 at 147.85, and that's gone right through the 148.53 support. Let's see, 147.49 to 146.53 is 120-minute support. And so far, the low today is 147.36. It went right there. It's trying to bounce off that level. This is going to be a very important couple of hours, I can tell you that, because if we break under it, that's not a good sign at all. So now let me do this. So we did did all the key indices. Let's do the SMHs, because SMHs tried to rally early on, then started to fail. Now they've gone down to just a minus 11 at 98.44. The 95.55 is the weekly. We haven't had a weekly support level for ages. That's the weekly level that has to be held. And so far today, the low is 97.61 and 97.34 is the 10-minute. 97.74 and 97.45 is 120. Now we're building a base of support. That makes today's action very important. We don't want to see a minus 600 today. We want to see a nice spring back. Unfortunately, every spring back today is really usurping energy, much needed energy, to conclude the downside. I would rather have this just sell off and just get a climactic low in the next few days and then have a pretty decent rally. I just don't see it. These rallies keep using up energy that is a waste, because not if you're going to make lower lows. So now that's the SMHs. We remain remain short the SMHs, having taken some money off, but we remain short from the 116s and the SMH. Let me put it over here. Was 120.71 all-time high. We got short on that dreaded H high bounce, and now it's trading at 98. So that's a big move down at any stage. Look, the stochastic's at 5%. If it doesn't flatten out, which is very negative, but suddenly turns around, that'll be the first sign to say, hey, semis, at least get a bounce. You haven't had a decent bounce more than a day or so. And all this move down, it's just been down, 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 down. And then what we're looking at, 101 is the 9-period exponential moving average resistance. And the black line is 103.80 for the 14-period exponential moving average. But a weekly chart suggests even with a bounce, we could get another H pattern that comes back and does a retest of this whole 97 to 96 area, 95 maybe. Okay, so now let's get back to a question about bonds. US, here we go. The bonds right now trading at 152 and 12/30 seconds, almost at the high of the day. Hasn't turned around, hasn't faltered. Is broken above Chapman wave inside wedge target repellent line, and the MACD is very strong. Stochastics at 94%. That's really good. The on balance volume, the blue line says it's getting a little toppy, but it's in leg D in the weekly chart. Now the question was, is there a left side right side price time match to the? Let me show you this. Expand that out. This is the continuous contract for bonds, and we're going to the high that was made way back in, right, I think it was September. I'll check on the date. So we can go to this particular bar right here. Is that the bar? Yeah, that's a little short. But I'm going to use this just for the moment. So what we're doing is we're trying to measure the number of bars from the left to the right. Yeah, I thought so. Look, that misses it by a chunk. Not a good sign. But oh, we can't everything going for it. Let me see. Oh, look at that. Okay, let's talk about this. Bonds. Bonds trading up 30 seconds. What's really important about this is that they've gone above the high that was made back in September, the week of the 8th of September of 2017 at 152 and 23 seconds. We've gone to, oh, no, it hasn't. It hasn't taken it up. We're at 152 and 17 seconds today. Wow, isn't that interesting? I'll be right back. And let's look at this as we go out. Oh, solid leg C. Very nice.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just get this done here. Oops, okay. So what we're looking at here is that the bonds have done. So what was the question? Let's see. I had the left side, right side match on the ZB today, 529 at 152.29, almost there. Sold part of my TLT, 1/3. Should I be selling more? You know, what I would do is if you've sold 1/3, I'd raise the stop on another third. I think we're real close to some kind of an oversold condition, but it would only be for a bounce. I don't think you were ready yet to call this some serious low. I think it's a low. It's not the low. And as a result, it could be a pretty sharp rally. You've got, I mean, the SMHs have just been 120 down to 97. That's a big move. So this is what I'm going to suggest. The TLT is in leg E at 129.74, and the TBT is in leg E to the downside at 30.54. If you look at the monthly with a low of on the 20, that was July of 2016, 29.45. We're within a point of that. I would not be surprised if we're going to kind of test that at some point. I don't know if we break it and holds, but on a monthly basis. So this is what I'm going to recommend. You've had a really good gain for the person asking about the TLT. I'm going to say to you, I would not be surprised if at 10%, with the W formation forming in the TBT, that's the inverse of the TLT. This is the ultra short Lehman 20-year Treasury bond fund. I'm going to suggest that you raise the stop on one part of it. Give it a little room, though. I'm not sure it's completely done, but to tell you that this leg E is just going to fail and go from 129 down to 124 and really quickly, I don't think it's going to be very quick. I think we're going to hang around here. Let me just do the TNX for a moment. That's the 10-year yield itself. 10-year yield is down at 22.24. See, it's way above the low that was made that was in September of 2017 at 20.34. It's at 22.24. The monthly chart says there could be a little bit more way to go. Maybe it's more time now than price. Yeah, I feel the best thing to do is you've taken really good gains to really benefit from your position. Why don't you take 1/3 out of the three positions you had? You've got 2/3 left. Take out of that, make 1/3. Let the stop be just for the next week or so, 126. I know you're giving up 3 points, but just for the moment, let's just say it's in the 126s. I'll tell you why. If there is going to be a really sharp rally by the end of the day and the market only closes down like 63 points or something like that, and then there's a big rally tomorrow, we'll see whether the bonds immediately respond or whether they hold up here like a VIX index that says, hey, we still don't believe that everything's done and we think that we want more insurance. And the VIX at 18.18 holds in the 17.60s for the next 2 days instead of dropping under 17.20. So let's do that. So yes, you've got a good position. You've taken nice profits. Raise the stop, at least for now, to the 126s. If you really are thinking, you know what, I've had a great gain, I don't know if this can keep going, then take out of the 2/3 that's left, take a little bit off out of your second tranche of third, so that third now is less than a third, keeping your 1/3 as a core that you're holding in the long position. So I'm saying to you, if you feel very strongly that this is just a gain that you don't think, let me see, 120-minute chart. Oh, hold on, don't move. Let me go to my automated TLT. Let's see where there's resistance. TLT has, ton of resistance in the 129.80s and 129s on the weekly chart. And there's a little doji candle. Hey, wow, good timing. So you got out of that with one position. Yes, I feel very strongly. That is that second 1/3 position. You might want to take a little bit off right now and then raise the stop to the 126.80 level just for a day or two. We'll look at it again tomorrow. I feel comfortable with that in the sense that you never expected such a big move so quickly, I'm sure. So having got such a big gain, you've taken a chunk of that gain, at least 1/3 off. I'm going to suggest either you put a stop in today. I don't know why you waste time. I wouldn't even put a stop at 129.20 on the day. Just take off a little bit extra now so that your second tranche of thirds is now in play. That's the movable one. That's the one that's going to have much more action. And thank you for the compliment of using the Chapman Wave left side, right side price time match. But I have to thank you as a student for being really diligent and doing the work. I didn't do that. You did it. Congratulations. Bravo. Next question I had was the SMHs. We've been short, as I said. So subscriber wants to know, is this a good time to start putting in some bids for the SMHs? This is what I'm going to say. I believe that the billings and the price extension from 80 to 50% gain to 120.71, I believe that we've given back so much that the billings, if the billings don't start to improve, you could see more. But if there's even a slight improvement in the billings coming in for April and May, then I think we're getting closer to what I was talking about as a median that I had in my mind. There was no price. I didn't know. How do you know how to price it when you don't even know what the numbers are? But in my mind, I'm saying that extension to the upside was just on false. There was no data. It was just pushing for the semiconductors. Now I think you're much more in line. Yes, you've got an advanced micro devices that shows some independence. It's giving back some of the gains of yesterday. It's down 82 cents, but it's holding much better than the others. All I can say is I would do this if you're able to in your mind. I know it's not easy to do. I would keep the short position, the remaining short position that we have, but as a completely separate. Why? Because I think we're going to do some more testing and just a lot of testing of the 97s to the 95s in the SMHs over the coming few weeks. I don't know how much lower than that we'll go, but I know that there's a real good evidence based on the weekly chart that even if there's a rally, there'll be some kind of give back. But I'm going to say that if you are looking at this and saying, I don't want to miss out on an upside move, if you're able to separate in your portfolio and in your mind that you have a short-term trade that's going to try to take advantage of a bounce in the SMHs, I don't think I'd go for the SOXL. I wouldn't go aggressively 3 times long. If you do this and you're watching every day and you're right in front of your computer, maybe you could. I just don't recommend it. Just have a position that says, you know what, I'm really understanding the nature of the SMHs. I'm actually going to try to play a bounce, treat it as a separate position altogether, as a trade. You could nibble here at 98.76 on the day. I wouldn't give it more than 40 cents. 98.74. I don't think I'd even give it 40 cents. I'd just give it a very tight stop. And as we're speaking, 98.76, it better not go underneath 98.68 in the next hour. Otherwise, I think it's not going to work. But if it starts to rally and it can get to 98.88 by 2 o'clock this afternoon, that's a good sign. So if a completely separate position, okay. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So a couple of questions I had. Let me just show you here. Remember the peak D? I said the fourth highest peak in the Chapman wave. That's the one that you really have to take seriously. Look what happened here. The low that was made at 9:52 this morning at 27.78.75 ran all the way to a peak D right there at 10:34 at 27.92.75, and then turns around and made that arch formation. Chapman wave inside. There we are. Chapman wave instant restart to the downside, goes to a trough D and then an E, and then it rallies. And I said that by what was it? I said by 12:26, we need to see a test of the 27.79 level. That was the high that was made right there at 11:20 last night, 25th. Oh no, way back on the 25th. No, it can't be right. 29th, that's the 29th, and we did that exactly right there at a peak C1, C2. Now it's in a rectangle sideways formation. I'm just saying it again. A move into the 27.93s today would be really positive, but it has to break the 200-period moving average in the 2-minute chart of 27.82. Any close at this particular point on a 2-minute basis, 3 closes out of 5 sessions, 5 2-minute sessions underneath 27.68 would say, uh-oh, not good. So far, this is not bad action coming off the low. A good attempt at a rally. Did the SMHs go positive? Yep, now they're up 24 cents. Okay, so we're going back. That was SMHs we were doing here. A couple of questions. XAL, let's see what that is. Crude oil tumbling like this. And XAL, the airline index is down 96 cents at 97.20. Not good at all. Gee, that's really. Let's see the IYT. Yes, the IYT is trading underneath the 25th of March low of 179.55. It's at 178.87. The stochastics now at 7%. All of these are suggesting that we're really close to at least a bounce attempt. Could even happen intraday. Now, don't forget the Chapman wave high reading of the trend gauge yesterday suggests that we should get a 9 to 11 point rally in the S&P futures. We've already had 2 of them. This could be the 3rd one. What is this one? Let me just check. Let me just go to the E-mini. Here we go. So the low so far today is 27.66, and we're at 27.78. Yeah, so there it is. There's your 9 to 11 point rally. It's trying to make that leg D. This is not bad action at all. So I think that a chunk of the selling, at least for this phase now in this noontime period, trying to get some kind of a bounce activated. It's going to be tough. Next thing I want you to look at is a question about. Oh yes, so this is very interesting. UST 3-month, what does it say? UST yield 2.35%, UST 10-year 2.22% equals yield curve inversion, like 2007 says economic growth rate will stall. So yes, GT, thank you for that information. I've been talking about this for a little while here. I believe tonight in my talk over at MIT for the Boston Investors Group, I'm going to try to articulate some things. I'll start thinking it through right now. Within the context of this mega bull, which I still believe we're in, there are going to be periods of intense geopolitical, political, economic, and intra-political vagaries. There are going to be things where we just don't know what's going to happen next. And that creates tremendous uncertainty. Tariffs, everything, Brexit, the whole thing. But within that context, it's really chart patterns that we were looking at. And my big question was, why would the XLK, the S&P Tech Sector ETF, go from the 76s back in October, plunge down 24% to the 57s, and then rally from 57 to 79, 20 points, well, 42, 44% rally to an all-time high, and then give it back like this. I'm telling you now, I've looked at, I'm not going to say tens of thousands of charts. I'm not going to say hundreds of thousands of charts. I'm going to say hundreds and hundreds and hundreds of thousands of charts. It is rare in a monthly. Now, I haven't looked at hundreds and hundreds of thousands of monthly charts, but I've looked at a lot, maybe 100,000, maybe more, of monthly charts, because every one of these charts that I show has a monthly. I always show daily, weekly, monthly, sometimes 120-minute chart, but their monthly is always there. This is so rare to break out like this and have such a big red candle after an all-time high is established, after one has been formed with a pretty serious down move. So the XLK is saying to me, think rotation. Now, if we're able to have a rotational correction here, whereby we're looking at some of the parts of this whole economic structure starting to do very well, while others that have been on fire start to take a breather, that's going to be a big deal. Why? Because it's going to say that at 72.60, the 9-point moving average of 71.53 might be hit in the XLK, that's the monthly, but the 69.94 area, let's call it the 69s, could become really strong support if there is further erosion, but that would be contingent upon some kind of good news. Now, this is where I want to see good news, and I want to see the market respond well to good news. And that would be tariffs, who knows what it is, but some kind of good news that says that the worst is over for the leading sectors. Not the IWMs, because the IWM at some point is going to find some kind of support and have another nice bounce, but it's going to work very hard to get to the 173.40s, which will start a brand new all-time high. The high of 173.39 of August plunged to 125.50 points. I mean, that's more than a third. And it's just going to be a real struggle. It's right on key support. So it's how we rotate. When you look at HACK, which is the iShares, I'm sorry, not the iShares, this is the Prime Cybersecurity ETF. It hasn't taken out 2 weeks ago's low. It went from 40.72 down to, I forgot to write it in, it was 31 something, 31.56 in December, 31.56. So 10 points, 31.56, that's 12, 28, 18. And then it rallies from 40 to 31, up to 41, 10 points, a third. That's fabulous action, but now it's giving back a chunk. And yeah, the monthly chart is the same as we were talking about the XLK. And I have to say that if it does drop even further, here we are in an area that is really, this is an area we got to look at for 2019, 2020 as being one that you really want to be looking at. Certain areas within the hack, within the cyber security ETF or that sector, because that's, I mean, let's face it, everything speaks to security. We have to have that. So this is saying to me, we've got the H pattern. It's holding okay so far, but keep an eye on it. And this is one of the best. So I'll be right back. Dow's down 368.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Just before we wrap up, don't forget you got Steve, you got Dave. I think Dave's away, actually. And then you got Tom O'Brien this afternoon. Check out my opening call, my daily newsletter. We've managed to pinpoint a lot of these turns, etc. Special speakers meeting tonight, Basil Chapman at MIT. It is at 70 Memorial Drive, Cambridge. E51, room 376, Wednesday, May the 29th, 2019, 7 p.m. to 9 p.m. We always get a lot of tigers that have been listening for years and years. I'd love to meet them. Just say hi. Some I haven't seen for ages. We're going to be discussing what's going on, where we're going, why I'm still a mega bull. But this is a very important period we're looking at right now. Been on a sell signal since the 22nd of April. And also with the SMHs, we do have some longs. They're still holding these longs, trying our best to keep them because these are sectors that I think will be much more on fire later in the year. So it's a very important period. We'll talk about bonds. We'll talk about the dollar. Oh, my, look at the dollar. The dollar today is, let's see where it's trading, The dollar is at dollar right now. Oh, it's up very nicely, up 18 and 98.12. These H patterns and the arch patterns I'll be talking about just in terms of easy patterns to recognize. Up channels, down channels. Look at this up channel. Let's see where silver is in its. Look, this is the up channel for the dollar. Look at silver. I pinpointed this a long time ago. Oh, it's still not down enough to test the lower part of the down channel. That's good action so far. So I love to be able to talk about these things in relation to where we are, where we're going. I just be real careful. Even that SMH trade that I mentioned earlier, just be careful. Treat it as something that's not the position that you want. It's just a quick trade position. Let's see what happens. I do not want to see the Dow down more than 500 points today. That'll really be getting ugly because key support levels are getting close by. I did that. I showed you just a moment ago in my Chapman Wave automated projections. So with that said, watch the VIX index. If the VIX index is able to bounce later in the day, going from 18.43 to maybe the 17.70s, because the market's come back 150 or more points off this minus 311 Dow low, 330. That'll be a good sign. Wow, if the VIX index stays in the mid 18s and even accelerates a little higher, whew, that 2338 high of the 9th of May becomes a target. Have a wonderful day. I'll see you back here tomorrow. Stay tuned for some great programming and check out my opening call, and I hope to see you tonight.